at all. Jameel, let's chat to you very quickly as well then. South Africa's currency has continued to weaken somewhat, and perhaps that's more dollar strength than anything else. It does seem then that the US seems to be a little bit more, shall we say, progressive or perhaps stronger with regards to those trade talks, and that seems to be helping their currency somewhat.
Good morning, and thank you so much for having FXTM as always. So yes, it was a real brutal day for any currency yesterday that faces the dollar, including commodities like gold, oil, and basically what's happened is the dollar strengthened significantly across the board. So the South African rand has now weakened quite a lot just at the beginning of the week yesterday. The reason for the weakness is probably because, yes, no news when it comes to US-China trade talks isn't necessarily a good thing, because we're only 2.5 weeks away from the possibility that the US will will increase tariffs even further on Chinese goods. However, the market's looking a bit more positive on Tuesday because of this news that's filtered through overnight that a deal has been reached to avert a new US shutdown. But generally speaking, most global investors are eagerly awaiting for any kind of guidance from the ongoing US and China trade talks.
Is the market not just fatigued from this, though? I mean, it seems to have gone on for quite some time, and yes, we keep finding that, you know, every day there's either a possibility of a resolution, then the next day there isn't, and it's just this yo-yoing which doesn't seem to have come to a head at any point.
It certainly is a yo-yo, and I would say that those in the market are fatigued of the headline. However, it's not something that's fatiguing financial market movements. If you check on our volatility chart, you can see the specific catalysts that are spiking movements higher throughout global markets, and the Trump trade tariffs is, you know, the key theme. Generally speaking, the reason why the market is not fatigued in terms of price movements in towards portfolios is because of the severe concerns over how bad these trade tariffs are going to be to the global economy. And believe it or not, we're already seeing this year through the economic data. 2019 is not looking like a positive year. It's going to be a downturn from 2018, and we're seeing this economic data ripping through all sorts of emerging markets. Chinese data, US economic data is also starting to show indications of a downturn, and European data is certainly taking a turn for the worst as well.
One set of words that I haven't heard during this whole debacle is already priced in. It doesn't seem that we actually know the outcome or even can speculate the outcome, so there isn't necessarily any bit that's priced in, and that's why perhaps the fatigue isn't settling in on this one.
I agree with you. That's exactly why investors and prices are so sensitive to any kind of headlines, because even if the potential outcome is going to be a positive one, that US and China make friends again, nobody can determine when exactly this announcement is going to come out. Or if it gets a bit worse before it gets better, again, nobody can determine when this announcement comes out. And part of the reason for this is because so much of this political risk news is not filtered through traditional economic data or traditional press announcements. It's coming through social media feeds like Twitter, which has completely taken investors off guard, traders off guard, and it's actually why the market behaves so erratically volatile to such a sensitive subject such as US-China trade tensions. You've got the two major economies in the world going back and forth at each other.
Yeah, and very quickly then, your expectations for the remainder of the week, anything else you'll be looking out for mainly?
Central bank guidance, just to wrap up quickly, central bank guidance, certainly we're going to be looking at if there's any more indications that developed central banks, Bank of England, Bank of Japan, ECB, even including the US Federal Reserve, whether they're going to continue highlighting some anxiety over this trade issue and whether this could halt their monetary policy framework in terms of potentially raising interest rates in their respective economies.
Jameel Ahmad, appreciate your time. Global Head of Currency Strategy at FXTM.